it looks like there's a lot of foreign exchange deposits within the banking system. In fact, I think there was a story in the newspaper just the other day where the foreign currency deposits had reached a level of at least 1 trillion shillings. And so this is money that is sitting in people's deposits, and we may need to see what is not happening in the foreign exchange market that is causing Kenyans to hold and put deposits in dollars rather than in shillings. And so maybe one of the things that I would like to explore with the National Treasury is the possibility of actually issuing a dollar-denominated bond, the way we issue an infrastructure bond. And we structure it and we sell it locally. And if we can get those Kenyans who are holding the dollars in the deposits to buy into it, because I'm sure the government can offer a better rate, then we'll have the possibility of actually increasing liquidity of dollars in the system, but also building up foreign exchange in the central bank, because ultimately, once the National Treasury gets those dollars, they will sell them to the central bank and get the shilling equivalent. So I think those are the things I would like to do as soon as I get into that position.
Ladies and gentlemen, those are things I would like to do as soon as. Clearly, this is a high priority issue for Dr. Kamau Thuge. First, let's start from here, Kwame. How do you assess Dr. Patrick Njoroge looking at the foreign exchange market over 8 years?
Well, as I said, I think in the second part of his tenure, the central bank in general, and perhaps he too, seemed to be too concerned about debt servicing costs. For that reason, I think the central bank spent quite a bit of money, perhaps wastefully, to try and prop up the Kenya shilling for too long. I think many people who had money waited them out, one. And so now we have many people keeping money, but they're not prepared to trade it.
Yeah.
The interbank market effectively collapsed, and it was admitted to by the president himself a couple of weeks back, talking about restoring it and all that. So those are very serious things, and the fact that they have happened at the same time as the Kenya shilling has depreciated quite a bit. Actually, the depreciation between 2019 and today is of historical significance.
Yeah.
So if you take those into, then he says, yes, there's something to be said. Now, coming to what Dr. Thuge said, I mean, it's true. If Kenyans are holding and they're unprepared, right, to let go of their dollars, short of government actually simply possessing those dollars or expropriating them, you need to give them an incentive to do that. Now, as the interbank rate recovers, perhaps that is useful. I only see one challenge. I'm not too sure that the government of Kenya is able to give the same interest rates that the US is giving. Sure. Because the US is giving some fantastic rates. So instead of giving it to the government of Kenya for 2%, why should I go to the US and get it? And I'll be getting the money in dollars as well. So you're competing a very big ally globally for it. But I think it's a policy that's worth trying.
Wangari, your thoughts?
I think it's an interesting proposition. I mean, having a security that's denominated in dollars, I think, could be a way to access for the government to access those dollars. But the question around why are they holding those dollars in the first place, right? And what will be the effect of releasing a bond, a dollar-denominated bond? They're holding the dollars because the shilling is volatile and there's an inherent risk in the market itself. Yeah. And I think people feel that if they hold dollars, there's some sort of security for them. So how does that play out if the central bank then issues a bond, a dollar-denominated bond? Is people's behavior or propensity going to be towards giving the government the dollars? Yeah. I'm not so sure, right? And even the question around who has those dollars, right? Who has those dollars and exactly $1 trillion worth of dollars. So I think it's interesting, but it also does open space for potentially remittances to come in and foreign dollars to come in, right? So Kenyans wanting to invest may find some channels to invest that money, not just the money, it won't just soak up the money that's local, it also soak up money coming up from Kenyans outside. So I think it's an interesting proposition.
Doc, here's something I'm struggling with this proposition by Dr. Thuge, and this thing has been mentioned by the Kenya Kwanza government even before. So you float a bond, dollar denominated. I'm assuming you're investing it in projects whose proceeds are KES denominated, Kenya shillings denominated. First of all, there's an FX problem. Right. Unless you tell us you'll only be dealing with export-oriented investments. So could we be compounding a problem if we went this route as opposed to actually addressing a problem?
Yeah, because one is first, you are not perhaps involving yourself. This is not necessarily a productive activity, because I mean, the way, if the goal is just to get forex from A to B, you know, and then so the repayment again becomes even a bigger challenge, you know. But let's stick just to the dollar, you know. What's the problem you're trying to solve? Is it a problem that has to do with the market, or a problem that has to do with government liquidity? If it has to do with the, I mean, it definitely has to do with government liquidity. Will be the repayment, for instance, be again in dollar, or is it going to be in Kenya shilling? What does that? What kind of a risk, especially with the volatile Kenya shilling? You know, are you doing? We've seen what just the external dollar loans have done when the Kenya shilling has lost value. You know, I think it was one morning, I think our debt had risen by 300 billion just because of an exchange rate change. You know, so for me, I'm not quite clear what problem we are trying to solve, or is it, I mean, just mopping money.
Mopping is one thing.
You know, fagia or fagia. I don't think that. I don't see the economic activity you are advancing by just collecting. You know, two, I'm also concerned about, you know, where are you investing this money? You know, is it just if it's sorting the deficit is definitely below 1 trillion. You know, unless you're borrowing to repay, and to sort out our debts. And then lastly, I think it will be of interest, as Kwame is saying, just to see what interest rate are you offering.
The pricing.
Are you putting us in more trouble? You know, I already have concerns about the interest rate at which government has been borrowing. You know, are you going to dip it further? Because then the risk you're putting the market into is higher, you know, and you're exposed as it were. So I'm not quite sure what is the problem that is being fixed with this mopping of dollars, you know, from private accounts of individuals, you know, and perhaps because all this is depositors' money. You cannot say it's money with banks. You know, it's depositors' cash. So I'm not clear on the problem being solved.
Kwame, on the question of what is the problem being solved here, we know there's been a situation in this market, and that's why we went for the government-to-government deal, which again, Dr. Kamau Thuge spoke to, that those who are chasing dollars can just find in this market. You cannot find. If you are especially an industrialist involved in heavy imports, at the end of every month you're struggling.
Yeah, I mean, that's it. So what this tells you is this. The big problem is people don't trust the quoted price of the Kenyan shilling. It doesn't reflect what their dollar value is to them. It would be possible to actually issue a dollar-denominated bond if you'd allowed the shilling to float so that people can move one way or the other. Without doing that, you're actually simply kicking the ball into the future. And for that reason, nobody's going to actually, because they'll ask themselves, in the end, how do you gain sufficient money, sufficient shillings to actually pay for their dollar when it's back out there? Yes, and I think one of the things that I think we've seen in this administration, and perhaps it's just the entire streets, one of the things that you've done is there are a lot of unconventional policy fixes that you will have. The government-to-government deal, government buying retail goods and services and food, government trying to get all this. When you have too many of them against pressure, when the thing is, look, the shilling's price in Forex is not correct for people who participate in the market. How do you fix that? All these other things that we're trying to fix are just games here and there. And it's usually the precursor to something really bad. Let's fix the real problem. Let's fix the real problem.
I don't imagine what the something really bad is. But here's the thing, Kwame. You will be told that in such an environment where we are, and to be fair, we've had multiplicity of shocks, which we haven't had in a very long time. You had COVID-19, then you had Russia, Ukraine, the spillovers are quite massive. economic orthodoxy might not just be working.
Look, you know, the shilling, the exchange rate is a price.
Yeah.
And price signals is how people
Make their
respond
decisions,
to market
yeah,
incentives and all
right.
that. It is just telling us that the shilling is at the wrong price. We cannot, I know it has significant implications for debt servicing costs because we have two big ticket items we need to pay for next year. I mean, sorry, in the coming 6 months, one after the other. But the point is, there's no way we can win both wars, keeping the shilling down and getting enough dollars to pay for them. We have to choose our struggle. I mean, to use a cliche word. And we have to, and I think we have to. What do we have control of? The shillings. If you're collecting taxes in shillings and you owe some Chinese person $2.1 billion or so, even the money that's coming from the World Bank and what will be coming up from the IMF, the taxes and revenues to pay for them will come in Kenya shillings. So the more there's a big disconnect between that real price and what we think the price should be, something will have to give.
Yeah.
And so all these clever conventional policies worry me for the thing that we're actually postponing the day of reckoning.